Hello everyone, this is Matthew Frailey with Breakpoint Trades. First off, happy holidays. As you know, Christmas is only 17 days away. Anyway, I founded Breakpoint Trades 21 years ago to provide advanced technical analysis, market commentary, trade ideas, and my personal passion, which is mechanical trading systems, which we have a ton of, from our SPY and ES mean reversion systems, volatility systems, KISS systems, you name it. Again, consider a subscription. I think you'll be impressed. Anyway, back to this video at hand. This is a weekend technical analysis review of the markets. It is currently December 8th, Sunday evening. And this is our backend system for our website subscription service. These videos are also website based. So I'm going to go ahead and get this recording started now for our subscribers. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone has had a wonderful weekend. It is currently Sunday evening, about 6 p.m. Eastern Standard Time. As you know, we're in the holiday season, so happy holidays. Christmas is about 17 days away. And if you happen to be new to Breakpoint Trades, these weekend newsletters especially tend to be quite comprehensive. I think there's over 100 charts in tonight's newsletter. We cover a lot of things, so it's not meant for those of you with short attention spans who are addicted to TikTok. This is for folks who really want to get down into the weeds, into technical analysis, learn, etc., and who are serious. Okay, so I'm not going to dumb down my newsletters just for the short attention span folks. But anyway, a lot of charts here. Our newsletters generally are in 6 categories. We first have our opening statement, comments on the market. Then I talk about some administration things, such as some of our open system trades, which we have a lot of those open. Then we'll move down to the general market. We'll cover the major indexes, S&P 500, NASDAQ, small caps. We do that in a top-down fashion. We'll look at the monthly, weekly, daily, and intraday charts, give you our thoughts there. We'll look at some key indicators like the VIX, and I also have some other indicators that are showing some divergences I'll discuss. We'll also look at the bond market and 10-year treasury yield. We'll look at a handful of the major market sectors, show you what things look like under the surface. We'll look at US dollar, Japanese yen, Bitcoin, which recently hit 100,000. Remember, that was one of our major targets, so that was finally achieved. Then we'll look at precious metals, gold, silver, and mining stocks. And finally, we follow up with trade ideas. We'll cover recent setups we've had, and I added some new ones this weekend. Again, like I said, Christmas is only 17 days away. We're in that holiday season. Doesn't mean, guys, that generally the market does very well this time of year. Doesn't mean it goes up every day into Christmas. In fact, like I said, we have uptrends on all time frames, long-term, short-term, intermediate term, but we are looking for a potential fourth wave pullback here at any moment. Okay, so we could definitely get that this week, even though we're near Christmas. Now, again, during Christmas week, market's almost always up, but the week before, definitely you could see something. So we'll see if we get some weakness here this week or not, some sort of fourth wave. Markets had a great year though. The S&P 500 and NASDAQ are up 27 to 28% respectively. Small caps, IWM, almost up 20%, and they were lagging early part of the year. And the Dow Jones up 20.7%, and gold is up 27%. It was up over 30%. So markets had a great year. News items this week. The main news items are the inflation data, CPI and PPI. That's the consumer and price inflation data. Okay. All right. So let's go ahead and jump to the charts. Like I said, first off, image number 2. This shows you a chart of the unemployment rate. So last Friday we had the jobs report, and per consensus, it ticked up to 4.2%. Okay. But again, guys, to me, as in my comments state here, the unemployment rate moves like a barge. It takes a long time to change direction. It's not like a sports car, it's not like a Porsche. It's not like my Type R. It's difficult. It takes a long time to turn it, and it'll tend to trend for years at a time. And because of that, this has been trending up, and I think this is going to continue. So I think a recession will be coming. Unfortunately, Donald Trump, the new president, will be dealing with that, and will likely be, blamed for it, even though he won't have anything to do with it. So this should just work higher over time. I think that'll be, the reason for the next recession. Usually I'm not a fan of moving average cross systems, but for the unemployment rate, because it trends like this, it tends to work quite well using a 5 and 9 EMA crossover system on a monthly chart. You can see it tends to catch these major macro moves in the unemployment chart. And let's be honest, these moving averages crossed a while back, so the trend should continue higher. Okay, so we'll see when that recession hits, but again, I think it's inevitable. It will eventually hit. Next, now let's talk about our trading system. So this table here shows you the SPY mean reversion system trades that I've emailed out to the website subscribers this year. So there's been about 25 system trades here on SPY. There's actually been a little bit more on the ES futures. Not showing those. They don't have any open trades right now. Because it's been a strong year for the market, the mean reversion systems have been fairly quiet. In a volatile year, a bear market, you may see close to 100 trades. But that said, these trades, most of them have made money. As you can see, we still have an open trade on the SPY breakout, which took a first entry on November 7th and a second entry on November 15th. So while a lot of the mean reversion systems are a few days, this trade has been open for 31 and 23 days respectively. Okay, it took partial profits, but just over a week ago. It's still in half the position, and it continues to raise its smart trailing stop on this position seemingly every day. These current stops now are above the entry. So this is a no risk profitable trade no matter what happens. Congrats if you took this trade. Again, you easily would have paid for your subscription. Next, image number 4. Now here's an image I posted on Friday on our community, trading community. And sometimes folks ask me, why do you run the 21 mean reversion systems on both the SPY and ES futures? Aren't they the same thing? Yes, they are basically the same thing, but they have different prices. Indicators are going to be in different spots. And even though you're running the same system on both, you're not necessarily going to get the same trades. A lot of times you will get the same trades. But here, this is a great example, the breakout trade. The breakout trade on SPY, which is on the left side, you can see it took the first and the second entry, and it's still long, as I said. It took some off, but it's still long. Whereas on the ES side, it took that first and second entry. The first entry was at a worse price. It took it a day later, so the SPY had a better entry. And it got out just a short bounce off the bottom. So this is a great example where this time the breakout trade worked better on SPY than it did on ES futures. Okay, and again, this will go back and forth. Sometimes the ES system will catch better trades than SPY, and other times SPY will catch better trades. One will have a better entry, one will have a better exit. One may not trigger on one, but it triggers on another. So you get the point. You get this averaging effect when you run the systems on both instruments. That's why I do it. So this is just a great real-time example. Next, talking about our KISS systems. I know quite a few of you recently signed up for that. I hope you're going to be happy. These have been awesome, these KISS trend systems. They're opposite the mean reversion. They're long only, and they follow the market uptrends. They try to keep you in uptrends for as long as possible, and they give you that smart trailing stop protection. So your risk is always defined. But you can see systems have had these open trades, and these have been awesome trades. Bitcoin, obviously, that's a Bitcoin type ETF, up 62% from the October 11th entry. IBIT, that's another one. Tesla, which has been on fire system. I have two systems for that, a 78-minute, 130-minute. And they're both up about 53 to 56%. So these really nice gains. These aren't back tested. These are live. So subscribers to these KISS systems, many of you guys are in these trades. I've been in these trades. These are awesome trades. Paying for your subscription for years or lifetimes. But some good examples there. And that does it for the systems, guys. So let's go ahead and move back to the general market analysis. So item number 6 shows the index sector table, what transpired last week. So again, for the week, we've seen some bifurcation with the Dow and Russell down. The Russell was down the most, down 1.2%. NASDAQ was up the most. Last week, the techs, big cap tech is what shined. Okay, things like XOK, Microsoft, Meta, stuff like that. That's what shined. So NASDAQ up 3.3%, whereas the S&P was only up about 1%. And again, you've seen weakness in the other sectors. Those sectors don't have the big cap tech, so that's mainly why they were down. As far as the 21 market sectors, again, despite the market overall having a pretty good week, like I said, it was concentrated in the tech area. You can see there's more down sectors than were up sectors. And where was the concentration on the upside? Technology, semiconductors, communication services. Okay, those are the big up sectors. Consumer discretionary also had a big week. But utilities down 4%, transport's down 4%, banks finally taken on the chin, energy really took it on the chin, XLE, oil services, crude oil's been quite weak. Now moving down to currencies, US dollar up about 0.3% for the week. Bitcoin, of course, finally broke that 100,000 mark. It was up to around 104,000 before pulling back. Remember, that was one of our main targets. Commodities, mostly to the downside for the index, mainly because of the weakness in crude oil and natural gas. Okay, crude oil down 1.9%, natural gas down 7.3%. Otherwise, some strength here in the agriculture sector. And precious metals, gold down 1%, silver up 1.2%, GDX, the miners, down 2.25%. Remember, this area has been in a consolidation correction. Long term, it's in a bull market though. So once this correction's over, I'm looking for a long-term buy on this again. As far as the bond market, we saw a pullback in the 10-year, 30-year Treasury yield. Next, item number 7 shows the economic news calendar. Again, there's items on the docket here. The big ones, like I said, are the CPI, PPI, the inflation data on Wednesday and Thursday. All right, let's go and jump to the charts. So here is Tesla. Remember, KISS Systems been long this, both on the high performance and standard. This continues to rock and roll from that little cup and handle pattern, made a new high last week. And techs have been leading. And here's the weekly chart of Tesla. You had this bullish ABCDE 5-wave coil on the weekly time frame that we marked up earlier this year. Broke out, and you can see Tesla, honestly, isn't too far from the all-time highs. So to me, it looks like Tesla is eventually going to break its all-time highs and just keep going. Good stuff. Next, number 10, here's Microsoft. Again, this broke out of a resistance last Monday through that 429 area, and then took out this coil. Number 11, here's Meta. This took out that resistance around 580 just over a week ago, and then it broke that coil or that expanded wedge last week. Like I said, big cap tech are what led primarily last week, and that's what we were looking for in last weekend's newsletter. We were looking to see if big cap tech would lead. And here's the other big cap tech, Amazon. You can see it's been rocking and rolling, taking out the recent highs. Big high close on Friday, up almost 3% alone on Friday. And one tech that isn't running away though here is NVIDIA. So remember NVIDIA, I talked about this broken channel. I said that would be a resistance on the back test. And you can see that's happened. So we got an initial bounce off this demand zone, but you can see so far after back testing that broken channel line, it's finding some resistance there. I warned about that. So now we'll see, does it pause temporarily here, or do we get another pullback? All right, let's go and move to the major indexes. So chart number 14, here's a weekly chart of the 5 major indexes. Like I said, the Dow was slightly down along with the Russell, but all the other indexes were up. It's been a heck of a year. It's been a heck of a last couple of years for the market. Next, number 15, here's a daily view. Couple notes here. The NASDAQ is above its upper Bollinger Band, so it is quite extended here short term. Next, let's talk about some of these KISS systems. So here's the weekly KISS systems for the major indexes. So we got new smart trailing stops on the Qs, moving up to 483.80. And on the S&P. By the way, notice there's a DeMark 913 combo in the weekly. So those DeMark 913 combos, while they don't always produce a pullback, they're a rare thing, and that definitely has my attention here short term. Otherwise, the KISS systems on the weekly are kind of like paint dry systems. Most of these have been long. since early 2023. Okay, so a couple years they've been long. And chart number 17, here's a daily chart of the S&P 500 KISS system. Like I said, smart trailing stop is now all the way up here at 59.49, 59.50 if you want to round it up. So system's done a damn good job about keeping the uptrend. If it gets out, it's getting right back in at very good prices. Just constantly moving those stops up. That was the 3, 4, 5, 6, 7th stop since the system went back long there in early August after that correction. Next, chart number 18, here's the 4 time frames, daily up here in the upper left. We have a DeMark 9 here recently. Notable if we get a DeMark 13, that's been pretty good for pullbacks. ATR is supporting all the time frames, obviously, so keep an eye on that. And let's move into the standard charts of the S&P 500. Again, we start with the large, bigger time frame, then move down to the smaller time frames. So here is the monthly chart of the S&P. Again, this is the bigger picture chart going back to 1994. And like I said, we've been in a secular bull market since the March 2009 bottom. You can draw this, represent this as a parallel channel, and perhaps one of the main targets could be the upper channel line. Otherwise, I've commented on this before, a simple long-term mechanical system for those of you who never want to trade, but you want to try to stay out of major bear markets. Using the 14 stochastic length and the 50% area tends to be very good for defining bull and bear markets. Okay, when it falls below 50%, that tends to signal your bear markets, like your tech bubble crash, your 2008 bear market. And even in 2022, you could see it fell below 50% before coming right back above it in 2023, starting that new bull market. So great long-term, let's call it a paint dry type of system. Next. Chart number 20, here's another system as well. This is a monthly chart of the S&P, and I'm using an 8 and 13 EMA crossover system. Those are Fibonacci numbers. And again, none of these crossover systems are ever going to be perfect. You're never going to catch bottoms or tops. But overall, this has done a damn good job about keeping you in the uptrend. You can see the last time it gave a buy signal was in early 2023. Okay. And chart number 21, here's another monthly chart of the S&P, just showing from the 2009 lows. Again, that's when the secular bull market began. And just showing you this, and I talked about this a couple weeks ago, you could count this as we're in the last stages of this wave 5 of 5. And once this ends, well, we could have a much larger correction, but it's just something to keep an eye on in the long term. This isn't something to react to right now, guys. Remember, this is a monthly chart. It's just something to be aware of. Next, chart number 22, here's a weekly chart of the S&P. Like I said, gained about 1% for the week. You now have a new demand zone down here. So we get a pullback here soon. Okay, still have a little MACD divergence here at the moment. Otherwise, we've been uptrending strongly since 2023, and we bottomed in October 2022. Next, chart number 23, here's another weekly chart. Again, just showing some of these wave counts that you could start to count 5 waves that were in wave 5 of 5 in some of these bigger time frames. Just something to be aware of, that when these do end, maybe sometime in 2025, we could have a bigger pullback in the market. Chart number 24, here's another version. This shows you we could be working on a wave 5 of 3. Once complete, then we look for a deeper wave 4. That would likely be sometime in 2025. But then you'll rally again to a new high in a wave 5. Okay. And last one, chart number 25. Here's another view. Very simple view. Basically what it shows here is the 89-week moving average. You can see how price has been respecting that as support and resistance. So again, just very simplistic. Price generally, it only gets so far away from this moving average before you get some sort of correction. So in 2021, it looks like it was about just 23.5% above it before we got that correction. And you can see right now we're about 23.6% above it. Doesn't mean you can't continue to go up and this can't beat at 24 and 25%. But eventually this will need to revert back to that longer term mean. Okay, again, these aren't anything to worry about short term. It's the weekend, so that's why I'm showing you this. Now let's move to the smaller time frames. Here's the daily S&P. Like I said, we are on the lookout for a potential wave 4 at any time. Here's one way to label this is a wave 3, get a wave 4 pullback sometime soon, then another 5 up, and again, I think if this wave 4 comes, I think it either comes this week. If we don't get it this week, then likely we continue up into Christmas, and then it would be sometime in the new year where we get it. So we'll see. Do we get this right away or not? But we are looking for this sometime soon. Next, chart number 27. Here's another daily chart of the S&P. Again, kind of shows you the same thing. We've been working on this wave 5 uptrend since 2023, and we're kind of currently we're nearing the final stages of it, but we have a little wave 3 here, then maybe you get a 4 soon, then a 5, and that'll complete it. A more bullish view would be this nested 1, 2, 1, 2, where you have a wave 1, 2, 1, 2, 3. But even under this, guys, you would sometime soon get a wave 4 pullback. Okay. Chart number 29, here's a 60-minute view. Notice you got a little support thing here. If we break this, notice there's a demand zone down here. There's also an open gap. So if we get a quick pullback this week, I'd be targeting this gap and maybe this demand zone. Chart number 30, here's a 60-minute chart, just showing that, potential wave 3, wave 4, 5. Chart number 31. Here's another 60-minute chart. Now this could lead to a deeper 4 pullback in this wedge, but again, for this to play out, you need to start pulling back right away. Okay. And chart number 32 is a 15-minute chart. Again, you can see the demand zone, which we bounced off late last week. Notice there's an open gap here. It goes down to 60.51. So if we get a pullback this week, filling that gap would likely be a magnet. But we'll see what things look like. You can see we're sideways here, so this could easily pop to a new high again on Monday, but we'll see where things open. Futures tonight are, they're up a couple points, so nothing major. Chart number 33, here's a half-a-day chart showing this wedge. Again, just showing this. Eventually, we're looking for a 4 pullback and a 5. And here's yet another version. Okay. And chart number 35, here's a hedging instrument. If you're looking for a quick pullback or you want to hedge some longs, SPXU. This is a 2-hour time frame. Again, there's no real pattern here yet. There is some MACD divergence building. And chart number 36, here's the daily chart. A little divergence here as well. Again, this can be blown out. But these are just a couple instruments to monitor, especially for a hedge. If you got a bunch of longs that you don't want to sell, but maybe you think a pullback's coming shortly. These are a couple ETFs to watch. All right, moving on, chart number 37. Here's the triple Qs, high performance KISS system, the daily system. Last week, the smart trailing stop jumped up nicely to 503.30, so nice jump there. System is still long, of course. Next, chart number 38. Here's the 4 time frames. Just like on the S&P, ATR is supporting all the time frames from daily all the way down to 78-minute. Okay. That said, one thing I talked about last week, just doing a follow-up education, is our cycle indicator, which you see resistance cycle is the magenta, support cycle or bull cycle is in cyan. And whenever price starts following the cycles really well, like you see here in this graphic, ping-ponging between the cycles about 5 times, that's important because usually when you break through the next cycle, it tells you that you're in some sort of wave 3. Well, you had that on the half-day chart, which I've been pointing out for the last couple weeks. See how price was ping-ponging perfectly between the support and resistance cycles? Then it finally broke through the resistance cycle on Monday. That signaled a breakout, and then price rallied up, just like you see here in the graphic. So that's an example of a nice little educational thing. Next. Chart number 39, here's the weekly Qs, up 3.3%. Like I said, big cap tech led last week. Overall, we're still in this nice uptrend channel from the 2022 lows. Currently working on some sort of wave 5 here. We'll see how far that 5 goes. Perhaps the top of the channel could be a target. There is some divergence building, which is never a sell signal on its own. Okay. Next, chart 40, here's the daily chart showing this channel. Okay. Could also draw kind of a little wedge here, but we could easily blow through that and perhaps go to the top of the channel. Again, no changes here. We're still in this uptrend channel. Chart 41, here's a 2-hour view. One possible look could be a wave 1, 2. We're working on a wave 3. Then we get a wave 4 pullback, then another move in a wave 5. So you see my point, guys. We appear to be on these wave 3s on most of these time frames on the Qs and S&P. So sometime soon we are going to get some sort of a little wave 4 pullback. We'll just have to see where that occurs from. Do we get it early this week, or does it wait until after Christmas? We'll see. Chart 42, here's a 60-minute view. There is a little MACD divergence here to take notice. And also notice here, there's a demand zone here down around to 522. So if we get a pullback, that's a potential area where we may find some support. But there's also an open gap below there. So on a nice fourth wave pullback, could even fill that gap. That's one thing to note. Great little educational thing. The moving average ribbons, whenever they really pinch like that, that can give you great, nice swing trades. You can see how that little pinch system occurred right at that wave C low. And chart 43, here's a 15-minute view of the Qs. Here you can see the little demand zone below, and of course that open gap. And chart 44, here's small caps, IWM. They underperformed last week. They're still holding their 20 MA, so we'll see if they can find support and rally again for the end of the year. Again, this ascending triangle played out beautiful with that back test, absolute textbook, and then rallied off of it. We'll see if we find support of this 20 MA and can pop again. Chart 35, here's a 2-hour view. Here I drew a tight little channel to monitor. So price needs to break this downtrend channel to get going up. Okay, that does it for the indexes. Now let's go ahead and move on. Let's look at some indicators here. Here's the VIX volatility index, as you know, tends to move opposite to the S&P, okay? And this shows you our VIX Bollinger Band system, the mechanical system. When you're outside the Bollinger Bands and close back inside, you get buy and sell signals, and they're very good. It's a profitable system. You can see all these nice buy signals this year, okay? You actually had a recent sell signal in early November, which played out. Bollinger Bands are starting to pinch here, so I just want to point that out. Chart 47, here's a 60-minute chart. This mainly focuses on gaps. VIX really likes to fill these gaps. We got a couple unfilled gaps, one to the way up here. That would likely be after a major correction. But we have a little short-term gap above. You can see up here around 1325. And we do have some MACD divergence building. Chart 48, here's the VIX, but this also contains this VIX VVIX ratio. So the VVIX is the volatility of the VIX, okay? They generally move together, but they can be slightly different. Anyway, the VIX or the VVIX are not below their outside their Bollinger Bands, but if you do the ratio, notice the ratio is slightly below the lower Bollinger Bands, okay? And you can see, just like the VIX system with the Bollinger Bands, you get very nice buy and sell signals from this on the S&P. Well, whenever the ratio closes below the lower Bollinger Bands, that gives you a sell signal. You can see that last one worked out for a few days. This also is given a sell signal up here. So that's why I said be on the lookout for a pullback here. This is something that's been pretty reliable. Let's look at some other things. Here's the S&P 500 versus the S&P equal weighted. That's where all the 500 instruments in the S&P are weighted equally, and instead of 10 or 20 stocks dominating it. So it tends to move together. When you see divergences, that's something to note. You don't really have a divergence here per se, but what you do have, if you plot the SPX to S&P ratio, SPX EW ratio, you do the correlation. This is a correlation indicator. Notice how the correlation indicator has plummeted. So when it plummets down here, tends to occur near market inflections, sometimes at highs, sometimes at lows. Well, this is definitely showing that we're likely near and some sort of inflection point. Some other things, here's the NIMO, that's the McClellan oscillator for the NYSE, and your correlation to the NIMO here on the S&P is also, you can see it's plummeted, okay, and these correlations tend to occur near inflections. Chart number 51, here's semiconductors versus triple Qs, okay, and S&P versus S&P 500. And notice this big divergence you have between the semiconductor Qs ratio, been trending down. So again, like I said, divergence isn't a sell signal on its own. This has been diverging now for about 2 months, but it is pretty prominent there and something to be aware of. Chart number 52, here's one I haven't shown for a while. This is the S&P 500 versus the Indian stock exchange, Nifty 500 Indian exchange. And you can see the two move together, okay? But divergences show up once in a while, like back here in late 2021, you had a lower high on the Indian exchange, higher high in the S&P, then we had a nice bear market correction. Well, what do you got here now? You have a lower high in the Nifty 500 I mean, versus higher high in the S&P. So is that telling us we're going to have a correction soon? Top in the S&P? Maybe. So there you go, guys. So those definitely have my attention. Let's look at the bond market. Here's the 10-year treasury yield. This pulled back 0.65% last week. Chart number 54, here's the daily chart. Again, nice pullback the last couple weeks. We had that divergence, as you know, a couple weeks ago at the MACD divergence. So that was pointed out, and that helped the market push higher. That said, did lose the 50-day moving average last week, but we're now testing this demand zone. This could be an area to look for some support soon. Chart number 55, there's the bigger picture view. Whatever the 10-year does, guys, long term, it is now in a secular bull market. Okay, because remember, it broke out of this 35-year channel back in 2022. Next, chart number 56, here's a 2-hour view of the 10-year treasury yield. I can count 5 waves down now. Because of that, I am on the lookout for a potential bounce here soon. Okay, so I added fibs here. Chart number 57, here's TLT 20-year bonds. Remember, they move opposite to the 10-year. Nice rally off that divergent low, nearing that 50% fib. And the trade ID I put out at the time was TMF. That's the triple ETF for the 20-year. So I pointed out this obvious 5-wave downtrend with MACD divergence. Whenever you see 5 waves and MACD divergence, that's a good trade, and you got a good trade out of it. And chart number 59, here's high yield corporate. Now this continues to hold up well. Remember the last time held that demand zone. You could see all those moving averages were bunched together. The 50, the 9, the 20, all held there. And this still looks okay for now. All right, let's go and look at the market sectors. Review some of these. So chart number 60, here's XOK technology. This led last week. Otherwise, still have this potential wedge-like pattern. Unless we just blow out of the wedge, it's still there. So take note. Chart number 61, here's semiconductors. They recently held the demand zone, but they're still chopping around here around these moving averages. Really need to get going and clear the downtrend line here. Chart number 62, here's the banks. So the banks and financials pulled back here recently. Not surprised. They had a hell of a run, especially from this ascending triangle I pointed out back in September. Beautiful move from there, but got overbought, had MACD divergence up there, so not surprised to see those pull back. And here's the financials, same deal. Both at around their 20-day moving averages. Chart number 64, here's transports. Like I said, they were down strongly last week, and you can see losing the uptrend line here. Now they have the 50-day below, so we'll see if they can find some support there. But nice haircut, nice pullback there on the transports the last couple weeks. Chart number 65, here is retail. Retail again broke out, but through this resistance, but there's a big supply zone it's up into in here. Jabber 66, XLP consumer staples. Nice rally out of the wedge off that big support. Logical pullback off this resistance for now. Jabber 67, XLB materials. They've been weakening. Watch this trend line and 200-day moving average. Jabber 68, biotech. Again, got a little bull trap back there in early November. Sell off, likely with Robert Kennedy, and then a bounce back. Maybe trying to flag here, but it needs to get going. Jabber 69, healthcare. This continues to work lower. You can see it's below its 200-day moving average. And here I added a downtrend line and some fibs. We're running around the 50% fib. If this is going to make a higher low, it needs to find support around that 61 fib. Otherwise, if it doesn't hold there, I think it goes back down to this area. You can see the last demand zone down here where it bounced off of. Jabber 70, here's XLI Industrials. Nice uptrend here, though you can count 5 waves up now. And one of the weaker sectors last week was energy. XLE down strongly for the week. Big sell-off here from the recent highs in November. Again, logical to sell off there. It was at the top of the range, right? Top of that 7 to 8 month range. It's now into this gap, which is a magnet. We'll see if it fills that gap and holds it, or if it keeps going lower. And Jabber 72, here's oil services. Big sell-off last week. Again, crude oil has been quite weak, so it's definitely having a factor there. Moving on to commodities, Jabber 73. Here's DBC, the index, down 1% for the week. Again, overall, though, still in this big 2-year range. Jabber 74, there's DBC on the monthly. Again, it's been in this big range, coiling for the last couple of years. Jabber 75, here is DBC on the daily. Pretty obvious downtrend channel that it's in. The bulls need to break this downtrend line at minimum. Here's something to monitor over the bigger picture. This is the CRB to the SPY ratio. That's commodities to S&P 500. Clearly, commodities have been underperforming since mid-2022 here. But you do have a potential wedge forming here. And you have 5 ways. 1, 2, 3, 4, 5 with some active divergence. Perhaps early next year, we'll see commodities outperform if this wedge breaks to the upside. Next, Jabber 77, here's crude oil. Like I said, down 1.4% for the week, still in this same pattern. But it's been overall downtrending really since 2023. Jabber 78, here's the daily chart. Early last week, I drew this diamond, and finally price broke the diamond to the downside. Jabber 79, UNG, that's natural gas, down for the week. You can see it's been continues to stall at that 200-day moving average each and every time. Jabber 80, copper, slightly up for the week, 1.4% for the week. Jabber 81, here's the daily chart, still in this downtrend channel, now at the downtrend channel line, resistance. Jabber 82, DBA, agriculture, continues working higher. Not a good sign for the grocery stores, quite honestly, for inflation. Honestly, a good stop now. It could be moved up to that higher low, around 26.50. Jabber 83, coffee, making a new high again, up to 3.3. And here is the 45-year chart. New all-time highs. Jabber 85, here's uranium. One to watch here, it possibly is coiling here. And here's the bigger picture of uranium. Remember, broke out of a multi-year base back in 2020. One of my main targets is the supply zone up here in the 40s over time. Now let's move to crypto, Bitcoin. So here's Bitcoin on the weekly. So as you know, Bitcoin went over 100,000. That was one of our main targets. And in fact, it hit 104,000 at the highs last week before pulling back. We were looking for this wave 5 ever since we put in that wave 4 low in July. So this pattern has played out. The alternative view here is that this is a wave 5 of 3. Okay. But otherwise, this wave 5 has been achieved. So be cautious now in this. I've had some neighbors ask me about buying Bitcoin now. I'm like, yeah, it could go higher, but Where were you back in the summer time frame? I would have told you to buy it down here. Up here, you're chasing, and it's risky, okay, in the wave 5. Chart 88, here's the daily chart. So again, we did break out late last week to 104 before pulling back. We did set up a pretty good MACD divergence at that recent highs and RSI divergence. So be cautious now, guys. Here's the ETFs we've had, IBIT. Again, you have the same thing apply to these. If you're in these, just protect those profits. Here's the leveraged one, BITX. Again, all have had amazing rallies from these patterns just to protect those profits. And here's Ethereum. I've been showing this. Now, Ethereum's been outperforming here in the short term versus Bitcoin. Nice move here. In fact, this still looks good. No divergence on the MACD here. And speaking of Doge, here's Dogecoin. I'm sure Elon Musk was happy to name that government waste and inefficiency as Doge. Anyway, coiling here. It's had a hell of a rally since the election. It's coiling. Could break out again. Moving on, US dollar. Chart number 93, US dollar, up 0.2% for the week. Again, big rally, though, from the September lows off that major support. Chart number 94, here's the monthly chart. I mean, technically, the dollar's been uptrending since the 2008 lows. Okay. And here's the daily chart. So the dollar did pull back here the last couple weeks, bouncing a little bit back on Friday. FXY, that's the Japanese yen. Remember, I thought this looked like a good long trade off this 5th wave low, and so far you got a nice trade off that. Congrats if anyone followed that. Moving to precious metals, here's gold down 0.8% for the week. Been viewing this pullback as a major wave 4. You can see the big rally out of that long-term base. Again, long-term bullish on gold, though short-term I still think it has more correction to go. Chart number 98, here is this daily view with the wave count. Again, that moved to 28.01. We viewed that as a wave 3 of 5. You know, we've been calling this as a wave 4 correction. Once complete, I'm looking for a new high in wave 5, over 3,000 bucks, guys. Chart number 99, here's the daily chart. Again, kind of viewing this as some sort of ABC. I still think this correction has more to go. Again, we'll see where it lands, but I still think we need a little more consolidation here. But again, long term, guys, remember, bull market, it should go much higher over the long run. And chart number 100, here's the monthly view. Like I said, overall, I'm looking for an eventual new rally to new all-time highs, but it's going to take some time. Chart number 101, silver, continues to just chop around here a bit over the 200-day moving average. Chart number 102, here's the big picture view of silver. I do expect it to go much higher in the long term as well. Probably up over $50 in the long term. GDX, here's the mining stocks. Again, they've been underperforming here the last month and a half. Not surprising. They tend to lead. Chart number 104, here's GDX on the daily. Bounced off that 200-day moving average, 50% fib. But pulling back here, we'll see, does it sell off to another low, or can it form a higher low here and move up again? But again, looks a little precarious here at the moment. Here's the 2-hour view. There's a big open gap below. We did have a symmetry break, though, on that rally, so I'm hoping this can form a higher low and then maybe have another bounce attempt first. And guys, let's talk about our trade ideas. First off, here's AZ. That's A2Z. That's one of the investments Steve and I have a nice position in. Had it for a long time. We did a webinar on this a couple months ago, and the stock ran from the mid-2s all the way to $7. So it's been a heck of a trade. I think this will go higher, much higher in the long term. But you know, I am buying on any good major pullbacks. There's a resistance up around here. We'll see if we can clear it or not in the short term. Chart number 107, here's the daily chart. So you can see the cup and handle. We did that webinar way back here in early October. And so it's had a monster move since, you know. So anyone who bought it for a short-term trade, you made 300% on it. Again, I'm not in it for that trade. I'm in it for a bigger type of trade. Right now, it's coiling here, so we'll see if we can pop again. Now, if we break down, there's a demand zone below that could be a target. And here's the 60-minute chart. Nice tightly wound coil. Moving average ribbon is tightly wound. We'll see if this can pop again or not. I'm hoping to see some news eventually on this with some major retailers. By the way, they do have it in stores in New York in Morton Williams for anyone who may be in New York. Let's follow up with trade ideas. So here's Sound. This is one of these AI plays. They've really started rocking and rolling last week. Huge move on this puppy last week. Look at that. AI, that's ChatGPT essentially. Also rallying, though not as strong a percentage as that Sound. Next, Chart 111. Datadog continues rallying as well. It's been a good doggy. We had it as a long idea way back here in the 135 range. So congrats if you bought it. Chart 112, UNFI was a great trade out of the wedge or out of the coil. Hope you took profits by now. Chart 113, AFRM was a nice weekly base. It's had a nice month. Long-term targets to this upper supply zone, but again, I think it'll have a pullback before then. Chart 114, Rocket Lab has been a hell of a rocket from our long ideas way back here in July, August, September, October. But finally had a nice pullback here. I'm viewing I think this pull bounce is going to form a lower high. Then we get another pullback. And that may be a buying opportunity, that wave C. But this correction is not over, I don't think. Chart 115, APLD, is another nice weekly long-term chart. Chart 116, BLND, another nice weekly chart coming out of a big saucer bottom. Target range would be up here in the supply zone, anywhere from $7 to $10. Chart 117, one of these dividend plays. I pointed this out as a buying opportunity to this long-term range. This pays a quarterly dividend, pays an annual of about 16.8%. So for those of you who bought at the bottom of that range, you had a great trade. By the way, the ex-dividend should be coming up in about a week or so. Okay, it's going to be 44 cents, I think. Here's some new setups, guys. So Chart 118, Oust. Really nice coil setup here. Great volume. This really looks good. Chart 119, AAP, Advanced Auto Parse. Nice base. Resistance 45.50. Chart 120, XMTR. Nice little ascending triangle pattern. Chart 121, API. Nice potential breakout up over here at 650. Chart 122, Lucid Group. Breaking out of a little base here. Maybe you get some follow through up to the 50-day moving average. Chart 123, OPRX. Little tight pattern here. Again, this could be a very tight stop around 510 on a trigger. Nice volume pickup on Friday. Chart 124, CYH, Community Health. Nice correction here. You can count 5 ways down though. 1, 2, 3, 4, 5 into a demand zone with some active divergence. So could be a low risk buy here with a stop. Chart 125, FSCO. Potential flag setting up here. All right, guys, that'll do it. We'll see what happens this week. Last check on futures. ES futures are up about 150. Gold is down $1. All right, we'll see where things end up this week. Again, happy holidays. Thanks for all the support. Take care.